Hi, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. Today's March 11th. We're going to talk about a couple of topics. Mortgages we cover every week, and then the other one, which we're going to dive into first, is what's going on with these housing prices. They are going crazy. So we're going to see what's really happening here. This first chart shows the year over change by month. So it compares March of 2021 to March of 20. What's the change? So in January 2021, we saw a 10% increase over January of 20. And we go to January of 2022 versus January of 2021, it's a 19% increase. So not only are prices going up, but they're going up faster. This is due to low supply, high demand. This is a supply and demand thing. Prices are going to continue to climb as long as we have that high demand in those low supply situation. I used this chart last week to discuss something different, but it gives us a good graphic of what we're talking about. Supply is going down. The orange bars, you can see them trending down. Now, there's a seasonality to supplying in the real estate market. Spring and summer, it goes up. Fall and winter, it goes down. But winters are lower every year, and summers aren't quite as high as they were the summer before. So we're seeing a downtrend there. The other thing we're seeing is that houses sold, which take away from the inventory on the market, more houses sold and fewer new listings. New listings are adding to the supply. Solds are taking away. There's a lot more solds than there used to be and a lot fewer listings than there used to be. So that's why we're seeing that downtrend. And as that supply continues to go down with that strong demand, prices go up. The key here is, as long as this market dynamic continues where supply is continuing to increment down and demand stays high, the prices are going to continue to go up. And nothing's going to change until that dynamic changes. So let's look back over the last year, 5 years, and 30 years. What's happened to housing prices, so we can get a little bit of a picture of how this has worked over time. In the U.S., 17.5% increase on average, 13.6% in Connecticut. Now, just so you know, the darker colored states had a higher increase, and the lighter color states a lower increase. It's not uniform across the board. Over the last 5 years, the national average was 54.5. Connecticut was 38.7. Over the last 30 years, since 1991, 258% national, 127.6% in Connecticut. So real estate values have continued to grow over time. Connecticut has seen below average price appreciation during this time. So we're below the national average. I think there's some room for us to continue to grow on prices. This is a national forecast for 2022. There's 7 different groups that made estimates. And I showed this slide maybe a few weeks ago, and they were estimating around 5%. Now they're up to 6.1%. I believe that they'll continue to revise that up as time goes on, especially if we don't see the expected new wave of listings that usually comes in the spring. So some takeaways from this discussion is we're in a strong seller's market. Very low supply, very high demand. Connecticut appreciation has been below the national average for housing over the last 30 years. I think there's some room for us to catch up, and so there's some room for the prices to continue to run. I think this is good news for sellers, and it's also good news for buyers. For sellers, there's a lot of equity in your home that you can capture by selling your home. Buyers, there's still some room for Connecticut prices to run, and mortgage rates, although they're not as low as they were historically over the last year and a half, overall, they're very low considering. And I'm going to show you a slide on that going forward. And then we also expect price appreciation to continue. So if you buy now and lock in the current price, as prices go up, you're going to build equity in your home, as well as that benefit of the lower mortgage. So talking about mortgages, 3.85 up from 3.76. So a little tick up. Inflation came in at 7.9%. That excludes housing and energy, which had significant spikes, which would bring it up. So we expect the Fed to raise rates next week in order to try to combat this inflation. And this rate increase is expected to result in higher mortgage rates over time. So again, buyers, this is a time where you got to make your decision. Do you want to try to lock in the rates today or see what happens in the future? Because no one has a crystal ball. I do want to point out this same slide that I finish every video on. We're at 3.85%. We're still below the average of any decade, the last 5 decades. So although we're not at the absolute minimum that we saw a year and a half ago, we are still at very favorable rates. So this is definitely a time as a buyer that you want to be thinking about, can I lock in this rate and get the house that I want? I hope you got some value out of this video. If you did, please click the like button. You can also subscribe and ring the notification bell. Be notified of new videos coming out, which I put one out every Friday. If you have any comments or questions, if you want to add to the discussion, please put it in the comments. I'll be sure to respond to you. My spring buyers and sellers guides are available. The links are in the description. Until next week, thanks for joining me. Have a great day.